Meta shares rising on earnings. Joining us now is Angelo Zeno, CFRA Research Senior Equity Analyst. Angelo, good to see you. All right, so Meta, now this stock had soared about 70% over the past 12 months heading into this print. Angelo, we're kind of bouncing around here in the after hours right now, basically hugging the flat line, but give us your high-level take, Angelo.
I think the numbers were fantastic, to be honest with you. I mean, for the quarter, obviously, I mean, you're looking at a number of $8.02 versus, I think we're looking at $6.74, growth of 21% year over year. I think we were looking for about 17%. So as far as the quarter is concerned, it was very, very good. And then, I think you kind of look at, the guidance for the quarter ahead. I think, overall it was slightly below the street and where we were looking at, but you also have to take into account there were Forex headwinds that are being accounted for. That was to be expected. I mean, I think you're going to probably see a number of misses from the street in terms of the guidance for the March quarter from a lot of these mega cap names. And you're looking at about a 3 percentage point headwind here for the March quarter. X that, and also mind you, we're going to be lapping the peak growth rate that Meta saw a year ago, which grew 27% in the March quarter of last year. So when you kind of take that all into account on a constant currency basis, you're looking at a growth rate of about 15% or so, which is kind of where we were looking at.
What do you make of expenses for this year of as much as $119 billion, especially given that they didn't give revenue guidance for the full year?
Yeah, I mean, listen, I would normally think that would be alarming, but when you kind of look at the numbers that they just posted in here, and you kind of look at the operating margin number that they threw out there, I think the operating margin was about 48% or so for the December quarter. They are executing absolutely phenomenally right now. So, as far as kind of that expense number here for the full year looking ahead, I think one, they're trying to be a little bit on the conservative side of things. That way they don't have to increase it as the year progresses. I think the other thing here is they're executing so strongly here. The top line growth, it looks extremely good, and the opportunities ahead for them remain extremely compelling. So in our view, we're not extremely concerned about it. But yeah, I mean, at the end of the day, it was a little bit above where we expected. We were personally looking at about 110 billion or so. So it is kind of, let's call it, 6 or 7 billion at the midpoint above where we're looking at.
Question for here, the opposite, of course, of expenses is revenues. And how do you feel about them just sort of punting on the idea of full year guidance on revenues? Obviously the first quarter looks a little light. The market originally reacted to that, and though now it's sort of putting it aside. Yeah. To what do you attribute just sort of the idea of saying, sorry, we're not going to give you that guidance anymore?
Yeah, I mean, listen, I think, as far as kind of these mega cap companies are concerned, I mean, most of them have not been giving annual guidance here in recent years. Whether it be Meta, whether it be Microsoft or Alphabet or Apple. I mean, these companies in some instances also aren't even giving numbers for the upcoming quarter. It's just more qualitative in nature. I think that's the case with Alphabet. That's been a concern for many out there, and the fact that they don't kind of provide better kind of clarity in the upcoming quarter. But as far as Meta is concerned, they didn't give full year guidance last year, and they're not giving it this year. The comparisons get absolutely more difficult here for the year ahead in 2025 versus 2024. They had an absolutely phenomenal 2024. So, I do expect the growth rates to come down. I think they can sustain something along the lines of a mid-teens growth rate on a constant currency basis. I think you're going to have a lot of volatility in terms of kind of the dollar is concerned. So I think that could also be another reason why you avoid giving a longer term outlook out there.
Angelo, what about DeepSeek? Meta investors who are listening right now, how should they think about what that new AI model means for their company?
I mean, I think they look like geniuses right now, right? I mean, I think at the end of the day, they when you kind of look at the Mag 7 names out there and who kind of got it right, I mean, the two names I think that kind of stand tall here are really kind of Apple and Meta for different reasons, right? I mean, on Apple's side of things, obviously the fact that they've kind of punted and didn't kind of create their own large language models and instead kind of are outsourcing it, as the cost basis comes down significantly and that business kind of gets commoditized on the large language model side of things. Apple is going to benefit significantly from that. And then on Meta side of things, having kind of that open source platform model and the ability to kind of leverage a lot of these kind of capabilities and models out there, I think will help them kind of monetize AI a lot quicker than others out there maybe had originally anticipated. And I think Llama at this point in time looks very attractive. If you're kind of looking at it, maybe not in 2025, it's not going to improve kind of the ROI in 2025, but as we look into 2026 and 27,
Right.
there's a massive opportunity out there for Meta.
We shall see. Angelo, thank you so much.